This is the Portfolio Coach Podcast, featuring Derek Davis, founder and CEO of Portfolio Coach. For more than 30 years, Derek and his wife Jennifer have been coaching their high net worth clients to financial prosperity.
All right, welcome back everybody to the Monday morning Portfolio Coach quarterback session with Derek Davis from Sky Oak Capital. Derek and his wife Jennifer have been helping high net worth clients increase and protect their wealth for more than 20 years. And for more than 15 of those years, they've been utilizing their proprietary trading signals to outpace the market when times are good and preserve the wealth of their clients when times are bad, overall achieving high outcomes and really great results for their clients. Think of them as the owner and president of your team, and them giving you guidance as the GM of your professional investments team. Derek, welcome again. It's good to see you again.
Hey, good to see you, and thanks for the invite. Happy to be here.
So, Derek, we're at such an interesting time in the market. You know, the market's is taking a drubbing for most of the year. We've had a few days that are up and had some good moments, but for the most part, everybody's portfolios are taking some hits. I'm watching mine right now. I've had a couple of good days, but when I look at the year, I've lost in my one group of assets, I've lost 11% in my work 401k for the year. And in my portfolio coach, I've lost a lot less because of the portfolio coach strategy and the teams that I have playing for me and the active trading that we do. But I start us off today. I'd really like you to coach us a little bit, and you can put that in the context of how the portfolio coach teams really help accomplish what you're going to share with us. But how do you trust your decision making when markets are either red hot, better than we deserve, and ice cold, worse than we deserve? And how do you trust yourself to get in and stay in positions that are worth sticking with, and getting out of positions that are going to hurt us long term? Coach us a little bit on that. Take us through that a little bit, and then help us put it within context of how a portfolio coach is helping ramps obviously on the institutional side and on your private equity client side. But for people like me who are portfolio coach users, how is that helping us? How are we the beneficiaries of your wisdom and your experience to avoid making bad judgment calls in good times or bad?
You know, the key is not trusting myself. I'm human. Human nature is the fear of missing out, which is buying high, and the fear of losing everything once the market goes down, which is selling low. And so what we learned a long time ago was to create a process that is not emotional. And so the process is a computer algorithm or quant that basically looks for momentum. And so when a stock starts going up, it'll buy it. And then when a stock starts going down, it'll sell it. And so we take the emotions out of it. And for the last 15 years, this has been AI driven, artificial intelligence, learning. You've all seen the computers on TV that kind of tweak itself. And basically what it does is it optimizes itself over the past so that it will provide optimized trading signals for the future. And so once the market started going down, we sold. And now the reason you've lost a lot less is we go into cash and we just wait until those stocks bottom. And then once the momentum to the downside ends, we'll put that cash to work and we'll be buying a lot lower. So if you're always buying lower and selling higher, you're going to end up making money over the long run. At Sky Oak Capital, we have a lot of family office clients that have, a large amount of money. They're not going to be making more. So they're very risk adverse. And so what we do is we really protect to the downside and then try to take advantage or just market perform to the upside. 70% of the time, the market is going to have an update. Doesn't feel like it. The last 4 months, we just had the worst start of the year for the S&P 500 since 1941. And the worst start of the year for the NASDAQ ever. But when something drops 50%, and we buy then, it has to go back up 100% in order for us to And we can take advantage of that. And that's just getting the stock back to even, and over time stocks do rise. So it's not my knowledge or my experience. I've hired some really smart people to put on my team, and we've taken out the emotions of making the decisions and allow the computer, which is a heck of a lot smarter than I am, to really give us the signals. Because emotionally, I want to sell now, but now might be the worst time to sell because we may be at the bottom of this most recent correction anyway.
I appreciate you sharing that. So my upbringing and my training in the markets was based on Benjamin Graham's philosophy, which is value-based investing, buy and hold a good stock, keep it forever, ride the highs, ride the lows. Portfolio Coach is a little bit different. Does Portfolio Coach argue with that strategy or support that strategy?
It supports it to a point. It kind of goes back to, modern portfolio theory, or I guess dollar cost averaging. We would not support dollar cost averaging, because all that does is mean you're putting more money in as the stock's going down, or you're putting more money in when the stock's going up. What it does is it keeps you from being wrong, but it also keeps you from being right. And we believe that we've been doing this long enough and have enough smart people on our team to help the subscribers, that we can do better than certainly they can do on their self, or following some little dollar cost averaging methodology that was, modern portfolio theory, great name, but it was created in the 1940s. Times have changed a bit.
That's great insight. So, maybe in a nutshell, what you're saying is Portfolio Coach teams, which, to those of you who are new to the concept of Portfolio Coach, we have teams, which is a group of players. Players are stocks, individual companies. So in a way, in a nutshell, what you're telling us is those teams are optimized to be right now. And tomorrow, what's right for that team might be different than what was right today. And based on those shifts in momentum, either upward or downward, Portfolio Coach gives you the signals to either trade players out or trade players in, by either investing in new positions or getting out of existing positions to go to cash while the market makes its changes.
Correct. Our analyst here will determine the 10 players to put on the team, and then the algorithm quant will decide what players to put on the field. Think of basketball. Some games a guy just can't miss. Well, hey, we want him on the court. And some days you're laying up nothing but bricks. We want him off the court. Basically, we have one stock that's going up during that period, and then you have one stock going down. And when the stock's going down, we want to be in cash and wait until that player gets hot again, and then take advantage of that and get back into it at that point.
So on that note, Derek, just give us, before we sign off on today's Monday morning quarterback, looking back at the week in review and projecting forward. What are a couple of teams that you're really looking at right now that are high performers that we should be paying attention to in the Portfolio Coach group of teams, or maybe sectors or trends that we might want to pay attention to within the Portfolio Coach framework? Give us a couple of tips before we conclude.
Yeah. So for the year, we've seen technology and the NASDAQ primarily sell off a lot. So it's down over 20% for the year. The S&P 500 is currently down about 13%. What has worked well in the past tends not to work well in the future, and what's performed bad in the past tends to work well in the future. So I think we're getting to a bottom. Technically, we're looking at a level now that the growth stocks are being rotated into from the value stocks. And so if you're going to trade in and out of particular teams, I would get into the technology focused teams, because they've lost so much. They've been so bad that they kind of have no place to go but up, at least for maybe the next 30 days. we evaluate this, on a daily basis and then send out these signals weekly to try to optimize the returns. Whereas value is done well and energy is done great because gas prices have rose and oil's, over 100. But is oil going to go over 200? Yeah, I don't think so. So it might be time to get out of those energy stocks and get into technology when you've seen 50% drops in the lemonades, the snowflakes, the data dogs, the stocks of the future.
Awesome. Thanks for that insight. So for those of you who are seeing us for the first time, Derek and his team at the Portfolio Coach are offering a really generous offer. You can get the gold subscription level for 90 days for free. To get in and out of these teams, as Derek is suggesting, recommend you go to getportfoliocoach.com, get signed up, and start to see how this actively managed portfolio benefit that comes from Portfolio Coach and their proprietary ramp software can get you on the right path with your investments. Derek, thanks again. We always learn a lot. Looking forward to learning more next week.
Hey, appreciate it. Thanks for the invite and great to be here. Take care. We'll see you next week.
All right. We'll see you then.
All right. Let's go make some money.
Visit get.portfoliocoach.com to get 90 days of gold subscription for free.